Silver in 2025 sits at the crossroads of opportunity and danger. Industrial demand is rising. Silver's use in photovoltaic cells for solar, high-performance electronics, and medical applications is at an all-time high. The transition to renewable energy is silver-hungry, and so are electric vehicles, especially for battery conductivity. At the same time, above-ground stockpiles are not growing in step with demand. Mine output in key producers like Mexico, Peru, and China has faced political disruptions, environmental restrictions, and rising production costs. On paper, this should push prices up, but the market's been seeing short-term dips, and those dips are the hunting grounds for bad actors. Whenever the price pulls back, offers flood in from every corner of the globe. Some are legitimate, many are toxic. And here's where professionals separate themselves from opportunists. They don't judge a deal by its price first. They judge it by the probability it will actually close. I've been in rooms where buyers are so focused on a 5% undermarket offer that they forget to ask the first question: does this seller actually own the silver? In bulk silver, ownership, compliance, and delivery certainty are worth more than a discount. That brings us to the first big gatekeeper, the SKR, safekeeping receipt. On the surface, an SKR is the seller's proof of life for the metal. It's issued by a bank or vault, confirming custody of the asset. The problem is an SKR is only as good as the institution behind it. More than 60% of SKRs I've reviewed in the past 24 months failed initial verification. Some were issued by institutions without the authority to issue SKRS for precious metals. Others were tied to vaults that lost accreditation, meaning the quality or even existence of the stored metal could no longer be independently confirmed. Some were entirely fabricated, complete with forged bar lists, fake vault signatures, and even counterfeit holograms. Let me give you an example. A European buyer was offered 1,200 kilograms of silver from a seller in the Middle East. The SKR looked impeccable, LBMA-style formatting, all the right seals. The vault was real. The bars existed, but the seller didn't own them. They were collateral for a bank loan. In legal terms, that meant the bank had first claim, not the seller. If the buyer had paid, the bank could seize the metal before it left the vault. That's why real SKR verification is a multi-layer process. Confirm the issuing institution's licensing and jurisdictional authority to issue SKRS for metals. Check the vault's accreditation status, LBMA, COMEX, or equivalent. Cross-match every SKR detail with the physical bar list. Serial numbers, weights, purities, assay dates. Contact the vault's operations manager directly using official registry contact info. Never numbers from the seller. Run compliance and sanction checks on both the issuer and the vault. Skip any step and you're exposed. And here's a reality most won't tell you. Professional buyers keep a blacklist of vaults and issuers whose paperwork they will never accept, often based on quiet industry warnings, not public scandals. Now, let's talk escrow, the most misunderstood tool in silver trading. Too many traders think escrow is just a safety lock for funds. But in the hands of a pro, escrow is a compliance enforcement weapon. It's structured so that payment only moves when every agreed condition is met. Conditions that protect the buyer, verify the product, and keep the seller honest. Jurisdiction is critical. Escrow in a jurisdiction that won't enforce your trade contract is worthless. I've seen deals where escrow was set up in a small offshore jurisdiction, and when the seller breached terms, the buyer's lawyers couldn't even get a hearing. The funds were gone. On the flip side, I've seen escrow save entire fortunes. In Singapore, a buyer placed $1.2 million into escrow for a 1,000 kilogram shipment. The contract required a 99.9% purity assay before funds could be released. The shipment tested at 92%. The bank froze the payment instantly. Without that clause, the buyer would have lost everything. When structuring escrow, use multiple release triggers, SKR verification, independent assay, customs clearance. For large deals, consider tiered payments, partial release after SKR verification, balance after physical inspection and clearance. Avoid clauses that release funds on proof of shipment without inspection rights. Now, supplier vetting, the place where amateurs lose the game. Vetting is not Googling a name, it's a forensic process. Step 1, jurisdictional compliance. Can they legally export silver? Some countries require government permits, others have quotas, and a few have export bans in place. Step 2, ownership verification. Are you dealing with the legal title holder or a broker buried in a chain of brokers? Every extra layer increases the chance of failure. In one Latin American case, a supplier was simply marketing silver from a mining cooperative without the cooperative's consent. When the miners found out, they refused to load the shipment. The buyer wasted 6 months and hundreds of thousands in legal fees. Step 3, operational proof. Look for historic shipment records, accredited lab assay reports, proof of insurance on stored metals, and bank transaction history showing they can handle large payments. Pros also check the logistics chain. Who's moving the metal? Is there unbroken chain of custody? Break that chain, and insurance coverage may evaporate. And here's the kicker. The best traders do pre-transaction background sweeps, not just on the supplier, but on their officers, their board members, and sometimes even their close affiliates. If a director has a history of fraud in another commodity, that's a red flag for your deal. Now, you've heard the framework. But what's in the Gated Insider video is what turns this into a working system. My full 20-plus point SKR checklist, including specific language patterns used in forged SKRs, exact escrow clauses proven in live disputes with examples of how they were enforced, the layered supplier vetting blueprint, from jurisdiction checks to deep multi-country database sweeps, 3 full deal case studies, a South American mine supply where escrow caught a forged assay report, a Southeast Asian trade where vetting uncovered a hidden lien on the metal, a European deal where a perfect SKR concealed a deadly delivery clause. The international databases and registries I use to confirm lien-free ownership and vault capacity in under 24 hours. These aren't theory slides. They're battle-tested methods taken from real trades and real disputes, some successful, some disasters, all with lessons you can apply tomorrow. Here's the bottom line. Public content like this builds your awareness. Gated content gives you execution power. And in silver trading, execution is the difference between a trader who survives and one who disappears after a single bad deal. So, if you want to play this game at a professional level in 2025, follow and subscribe right now. And when the Insider Breakdown drops on TradeSKR.com, make sure you watch it before you sign your next deal.